Hi guys, today we're going to discuss the weekly analysis, and since this is the beginning of the month, we're going to start on the monthly time frame. As usual, we have to highlight the high and the low. So this is our previous month high and our previous month low. I prefer to highlight my zone so that I know which zone it is on the lower time frames. It's very helpful. And then we're going to do the high as well. Now that we have highlighted our high and our low, we also have to highlight what could be important on the higher time frame. That will be the monthly, where we can expect price to go to if it were to break above, and where we can expect price to go to if it were to break below. Right, so we're just going to say we fill target. You can also say monthly area. It's an area of interest, right? And then we're also going to highlight this area. That's also a weak fill target. I think we have this. Yeah. All right. So from what we have right now, we can expect price. We can say, all right, we can say price might have created a range around this area. As you can see, all of these candles are next to each other, so that means this is a range. Now, before this range happened, we had a trail runner right here, bullish move, strong bullish move, and a strong bearish candle. That's a trail runner. That's a very important candlestick formation, especially when it comes to gold. So if we had a trail runner rejecting the high, and then we have price ranging around this area, we could potentially have price or lower. However, the same way we have a weak fill here, we also have a weak fill above. So it becomes a little bit tricky. At the moment, price, our previous candle, seems to be pushing price higher, but that was December. So we have to wait and see what happens this month. Price could give us the upper weak fill and then come back into the range and possibly range some more until it's ready to give us the lower weak fill. But for now, besides this small range that price is in, we could also have a bigger range that's happening. I also consider this a bigger range that's happening. So price went high, touched the high, right? It went low, touched the low, and now we're just playing in the middle, right? It also tried touching the high on this week, right? So if this candle doesn't cause a lot of problems because it is pushing price higher, it is pushing price to give us a weak fill. It did close bullish. The only thing is it was a December candle, so I wouldn't trust it that much. All right. And price seems to be creating a new, we had a low here, right? Could this be a new low also? So there are things that we need to really consider and watch out for on the monthly time frame. That's why we're going to pay close attention to the lower time frames. Now let's move on to the weekly time frame. On the weekly time frame, if we look at our weekly candles, they are all pushing higher. We have 3 weeks pushing higher, and since price created a low right here, right? You can see how this candle, and this candle, all of these wicks, they are trying to come back lower and retest this level. Or we could say they have done that. They have pushed lower to retest the low, right? And they keep pushing higher, which tells us that price might have a higher chance of pushing up to complete the wick fill before it gives us any other information. But then for that to happen, this week's candle needs to close bullish above our previous week. So this week is going to be very important, especially considering that it's also the first week of the month. And last month was December. So let's put our levels right for last week's candles. We need to put our last week's low, right? And then our last week's high is also our monthly high, right? Let's put that also. The fact that it's a monthly high and a weekly high means it's a very important area, which brings us back to it's a very risky week. It's best to be very careful with what you do. We could also put a level right here. The reason why we highlight the high and the low is so that we know when this week breaks the high, we know the trend is continuing, since last week was also bullish. But when it breaks the low, we know the bullish move has been invalidated. So I believe that those two areas are very important to know, especially considering that they are on the weekly time frame. Right? Now, if price was to break this level on the weekly time frame, that gives us a weak fill target. So we're just going to say weak fill trade. This is all on the higher time frames. That's why we're highlighting, so that we know when price reaches it on the lower time frames. Okay, now let's move on to the daily time frame. On the daily time frame, what we need to do now is we need to adjust our levels, right? So this gives us the weak fill trade, but before that weak fill trade takes place, we have an area that we need to watch out for, right? This area right here. Remember, these areas that are highlighted, we're just putting them there so that we know on the lower time frames. We always make sure that you don't have way too many zones for no apparent reason. The zones that we have on our charts, we know them, we know why they're there, and we know that we need them to be there, right? And then on the daily time frame, we have a low that has been created over here. And then now we need to go above. Let's see, above we do have an order block right here. If you recall from our order block lessons, an order block is the last bullish candle before the bearish run, or the last bearish candle before the bullish run. So we're just going to say order block area. So when price gets around that area, we know that it's our order block area, and we use our order block knowledge to catch an entry if price is going to reject around that area. So that's what we have on the 4-hour time frame. Now let's go on the daily time frame. Remember, these are session breaks. The daily breaks, they mark the start of every session, or basically the end of each day. Right, on the 4-hour time frame, we could adjust this because we don't like our lines cutting through candles, right? We could also adjust this one. Consider that it's our weekly low, then we'll put it on the weekly low. Right, the 4-hour time frame, this could be interesting right here. Last bullish candle before price went down, that means it's an order block, the same thing we have around this area. The 4-hour time frame, we also have some sort of an order block right here. Last bullish candle before price went down, that's an order block. We could even say Actually, we could even say our last bullish candle before price went down could be this one, because price went down. So this might have just been a level created for price to go down, right? So we could consider saying we could put this area, and we could also write it as an order block area. Whether you're considering this one or this one, this whole area is an order block area. Price could reject from here if it does continue going higher, or it could play around this area for it to give us that weak fill that we talked about, right? For considering what we have today, we don't really have much information. We have candlesticks that have been printing right next to each other, as you can see, and we've had bullish candles since Monday. So, well, since Tuesday. So that's very tricky. Let's see on the 1 hour time frame. On the 1 hour time frame, we do have a zone that was created around this area, right? Now, what you could do is use we will talk about this more later, but the Asian session is very important. So since our Asian session is very important, we need to know where our Asian session high and low are. This would be the high. I would say this was our Asian session high, and this was our Asian session low. So you use this area to your advantage. This could be our fake out, our Asian session fake out, for price to come back and then maybe give us a retest and then go lower, right? To retest this area possibly before it goes higher, right? Because price gave us a low. We could say this was our peak formation, right? We had an impulse. We now have a range, right? What comes after? Stop and low for the next impulse. So that could be what's happening. But for that to happen, we need to see price dropping back into the range, right? At least coming all the way down to retest our low. And then from here, we know if price breaks and closes below, we know it's going to come back lower for it to go higher. So what are the points that you need to look out for? You need to look out for this candle. How is this candle going to close? If it closes back into the range, you have a scalp trade for you to scalp the trade to the Asian range low, right? Because if price comes back into the range, there's higher chances that price is going to continue to the low or to the high. And if it does that, then we know what to expect if it does that, right? And if price plays, let's say price gives us a low, since this is also clean traffic, it comes back all down to the low, right? And if it starts ranging around this area and it comes back to the low, right? Starts ranging, it creates a new high, then you can expect price to give us that stop and low, the retest, for price to go higher. And then if it does go higher, then we need to wait and see what it does around our order block. Our order block, it might give us a rejection or it might give us the weak fill. All right. So that's one thing to look out for. However, if price does, since this is all clean traffic, price could also come all the way down. Now, if it does come all the way down, that's also very good, because if you go on the daily time frame, with an engulfing candle. Now, this is a very good engulfing candle because it's covering two candlesticks and on the daily time frame. Now, I understand that some people consider an engulfing candle the one that's only covering one candle, but I prefer it covering two or more candlesticks. It's the same way this one is doing. All right. So that's a very nice engulfing candle, and it closed below this range, right? That's first thing. And then our next candle, it went 50%. Now 50%, if price manages to hold around this area, we can see it coming all the way to give us a weak fill for this area, right? And then we'll have to wait and see what price does next, since our previous week's candles were all bullish. So if we have that in mind, we need to highlight this as a weak fill trade opportunity. I'll put a line, a zone right there, and then we will highlight that as a weak fill trade opportunity. Weak fill trades are the best. They are very easy and simple because remember, a wick is a range, and as we all know, ranges are filled most of the time. So that could be interesting. So that's what we have for today and for this week. I hope that was understandable. But yeah, we can expect price to do a lot, and there are countless of opportunities for us to catch. This could also be an impulse, range, impulse. The only thing we would want to see is we want to see a stop and low or a fake out, and then price goes higher. But since, as we notice on the 4-hour candles, they are all bullish, we might not get that stop and low. But if we do get the stop and low, that's a very good thing. All right, stop and low. If we don't get the stop and low, then this could be a very tricky situation. When price hits this area, it might come back also. You never know. And then if you look on the daily time frame also, candlesticks have been next to each other, so this is also a range. We made an impulse, and now we could be ranging around this area. All right, so we have highlighted all of the important areas, and I have given you all of the trade opportunities. That's all for this week. I hope you all have a great week.